Hello, and welcome back to the Wallfacer Labs Q1 2024 State of the RWA Market. If this is your first time joining us, this is a quarterly presentation that we put together to outline the state of the RWA market over the prior quarter. We started doing this because we thought there was a lot of bad information out there in terms of talking about RWAs, and so something we want to be able to provide to interested folks. Before we hop in, please do check out our other content on Substack and our podcast. You can easily find all of those links at our linktree /Wallfacer Labs. This will also give you access to our YouTube where you can subscribe so that you can get notified of these videos faster. We've got a busy quarter, so let's hop right in. As always, we'll start out with T-bills, go through private credit, look at some trends from last time, and then dive into new trends. So first off for T-bills, I always like to cross-reference different data sources here. Historically, I've used Steakhouse Finance's Dune dashboard and RWA.xyz's portal. This time around, I've also started using DeFi Llama because they are the only source that accurately captures all of Ondo's cross-chain TVL today. So over the prior quarter, we've seen overall growth of 41%, with the sector going from 916 million in treasuries on chain to now 1.2, almost 1.3 billion. Most of the growth this time around comes from two or three sources. So the first one are some of these new launches. As many people will have probably heard, BlackRock recently launched their on-chain treasuries product. That has gotten off the ground with now almost about 280 million worth of deposits. The other big launch this time around has been Superstate's new product. Superstate is Robert Leshner's new company. We'll cover them a little bit later. But that got off the ground with 82 million worth of deposits. Those two launches make up the bulk of the growth. We've also seen some change. So if you look at Ondo here, Ondo's deposits mostly seem to be shifting from their OUSG to their USDY product. As you can see here, their OUSG product has shrunk recently, but that has been offset by the massive growth in USDY. Outside of that, I would say not a ton of change. We've seen some shrinkage in products like Maples, for example, but outside of that, not a lot of real change. Obviously, the centrifuge product has a lot of growth on a percentage basis, but that is on a fairly small denominator. One thing to note is that the last slide does have a bit of double counting, as Ondo has moved the OUSG deposits into BlackRock's BUIDL products. So if you take a look at BlackRock's Etherscan today, you can see that the top holder is actually labeled on Arkham as an Ondo multisig. Outside of that, you can see if you take a look at the BlackRock product, today there's only 8 holders of the product. This lines up with a general trend we've covered in the past, which is that within RWA, there is generally a small user base that makes up most of the deposits. Additionally, for Superstate, I think today they have 9 or 10 depositors in their product, even though it quickly shot up to about $80 million. Outside of that, just digging in a little bit more on the BUIDL or BlackRock's product, most of the wallets that are funding this today are fresh wallets. The one exception was the 0x12 wallet, which seems to be a very active MEV-bot. Guessing it's maybe Wintermute or GSR or someone like that. But generally speaking, that kind of lines up with what we've seen in the past. We also saw a solid quarter of growth for Centrifuge. Based on the Dune dashboard that I use and some data sourcing directly from their website, this is the second quarter in a row that we're seeing growth outside of just the Block Tower portfolios. Granted, about half of that growth is coming from the new Silver portfolio, which is also financed by MakerDAO. That said, this is still pretty positive growth overall for Centrifuge, and it's very encouraging to see that type of growth. Their T-bill fund, as I highlighted on the last page but didn't cover, also launched sometime in Q1 with a bit of deposits. That has also grown now to about 4.6 million worth of deposits, showing some growth there. Now let's quickly get into the new launches. There's really 3 launches I want to cover. That includes Superstate, M0, and some stuff from Ondo. Kicking off with Superstate. So as many listeners will probably know, Compound Finance founder Robert Leshner is now on to his second act as the founder of Superstate. Superstate is an asset management firm that is focused on modernizing the infrastructure of investment funds. They are In some respects, the first real crypto native asset manager that I've seen, in that their value props are trying to take advantage of the speed, programmability, and compliance of blockchain tokenization. Their first product is the Superstate Short Duration US Government Security Fund, which is basically a T-bill fund that uses blockchain for some of the ledgering and all. So my understanding of this is that today you can deposit into it with either cash or USDC, and you are then issued basically a tracker that is an ERC20 token that today is non-transferable, but that represents your ownership share on the blockchain. I imagine that going forward, there will be a lot of additional functionality that they will try to work into this product. Compound itself, Robert's former company or protocol, has also done some work around kind of allowing asset managers or custodians to delegate their ownership of assets without actually having to transfer them. I could see all of this kind of coming together to eventually allow assets like this to be used as collateral on Compound or other lending markets in the future. So we'll see. Obviously Robert is an expert in the space, and I'm very excited to see what comes of this product. Robert also did a great podcast on Bankless recently that's worth listening to. He had some very bullish predictions in terms of what crypto assets, tokenized crypto assets will look like in the future, expecting these sort of tokenized on-chain assets or RWAs to be in the trillions by the year 2030. So we'll be looking out for that. The other launch that I wouldn't say it was a full launch, but that the protocol gave some more information about what they're doing is M0 Labs. So M0, if you haven't come across them, announced a big round of funding about a year ago in 2023. And they have two very notable co-founders, Luca Prosperi, who many people may know as the author of the Dirt Roads Substack and formerly a contributor to MakerDAO. And one of their other two co-founders is Greg DePrisco, who is also the co-founder of Ajna, which is a new lending protocol that is getting some traction now. M0 is complex, but I am going to try and do my best to summarize it. First off, it is not correct to simply think about M0 as a stable coin or the way that you may think of something like a mountain USDM, for example. Here is my summary of what M0 is. M0 provides infrastructure for generating programmable digital cash backed by high-quality collateral. The goal of M0 is to redesign the monetary stack rather than building atop the legacy systems. So obviously that sounds very lofty. What does that mean in practice? From reading their white paper and some of their public materials, M0 is itself kind of a set of rules and incentives that allow approved entities, which they call minters, to create a token called M. To create M, these issuers have to lock up high-quality collateral off-chain, such as US Treasury bills. The protocol ensures that M is fully backed by using a bunch of on-chain, off-chain connective tissue. Minters can then use M as a building block to create other products like stablecoins pegged to the dollar. So for example, if I was BlackRock and I was using M0, I would lock up, a bunch of T-bills or allow people to invest directly to lock up T-bills off-chain. I would then mint this M asset on-chain, and then I would be able to take the M asset and create new stablecoins using this new primitive. So for example, BlackRock could create the BRUSD or whatever, and it wouldn't have to just be backed by the M that comes from BlackRock's T-bills. It could also come from other BlackRock products, for example. That is my understanding as it stands today. We haven't yet seen a ton from this team, but definitely it is one to watch as they have a very, very big vision. Now let's get on to Ondo. Ondo's launch in Q1 has been staggering, to say the least. I spoke to a bunch of people around the time of the launch, and I think everyone was taken back by its growth. As we've talked about in the past, RWA tokens, generally speaking, don't trade that well and don't get valued very highly by the market. Ondo has been the exception to this. The hype and excitement around this token is unlike anything we've ever seen in RWAs to date. Previously, I think the highest FDVs we've seen of RWA governance tokens has been Maple and TrueFi. In Maple's case, I think the FDV of that token at peak was about 600 to 700 million. In TrueFi's case, it was about 700 million, 800 million, something like that. Ondo's FDV is now 9 to 10 times higher than that. 9 to 10 times plus higher than that, trading at least last I looked, a $9.1 billion FDV. That said, it's not as if Ondo has been sitting on its laurels. They've had a bunch of new launches and announcements as well. Probably the top launch has been Ondo GM, or Ondo Global Markets. To sum this up quickly, it is maybe in some sense similar to M0 in that it is trying to be this connective tissue between the off-chain financial world and the on-chain financial world. While I think most people are thinking about how do we take off-chain assets and bring them on-chain, my understanding of Ondo GM is that it is a bit more of a two-way system where someone can hold assets in a brokerage account and move those on-chain as ERC20 tokens or whatever. And then on the flip side, Ondo GM, or I should say the on-chain aspects of this, can actually direct off-chain brokerage accounts to do things. What do I mean by that? So let's say, for example, that I held some Ondo tokenized asset in my wallet and I wanted to transfer it to you. Doing that on-chain today would have no bearing on the off-chain world. In this new system Ondo is proposing here, I could transfer to you and then have an off-chain transfer agent actually update that to say that in the quote-unquote real world or the off-chain world that you now hold this asset. It's pretty interesting. We'll see how it plays out in practice. Obviously, we need to see other assets get tokenized besides just T-bills, but it is a really interesting step forward. Outside of that, Ondo has also sort of announced, or not sort of announced, but they have announced that they are moving the reserves for OUSG over to BlackRock's on-chain product. Obviously, this has gotten a lot of excitement as well from the market. Other things to keep an eye on, a little bit more in the pure DeFi realm, is some of the things happening on Morpho. Morpho, kind of to oversimplify it by a lot, allows managers to create non-custodial yield vaults. One of the trends we're seeing is that some of these managers are trying to take advantage of T-bill yields. We'll come back to this in a bit with what we just announced at TrueFi with Trinity, but obviously the trend here is that RWAs, the direct assets, tend to lack the composability, transferability that pure DeFi assets do have. Morpho's managers have been trying to rectify this by kind of passing on the yield from some of these RWA assets. Other thing to note is that Centrifuge, one of the leaders in the space, is in the process of turning on fees really for the first time. I think they're doing these fees pretty intelligently. They have different fees for public securities like treasuries versus private credit, which just in general is going to have a higher yield. They also have fees that scale down as some of these pools get bigger, which naturally is a good feature as it encourages asset managers to stay with the platform rather than getting into kind of the build versus buy discussion. Now let's move along. So as some of listeners may know, my company, Wallfacer Labs, who puts together these presentations, are core contributors to TrueFi, one of the oldest RWA credit protocols in the space. We try not to cover TrueFi too much as we don't want to be biased in these presentations, but this time around TrueFi does have two very substantial announcements that I think are bigger trends in the space. The first one is that Cicada Partners has announced that they will be underwriting crypto native lending on TrueFi again. The team at Cicada Partners previously comes from Orthogonal Credit. Orthogonal Credit was historically one of the largest underwriters, if not the largest underwriter, of on-chain crypto credit. Historically, they had used Maple to underwrite these loans, but given a lot of the technical developments that we have had on TrueFi in the past year, they have opted to use our platform and technology going forward. We're very excited about that. I think so far we've already whitelisted 8 or 9 crypto native borrowers to kick this off. We're hoping that some of these will be live in mid-April, and we are looking at target yields in the 15 to 25% range. TrueFi will also be exploring L2 expansion to try and bootstrap some of these new markets. And so do please keep an eye out on some of the announcements coming here. We couldn't be more excited to work with the Cicada team. I think they're one of the best managers in the space, specifically for this type of credit, but for credit more broadly. And in addition to that, TrueFi has also announced, or I should say Wallfacer Labs has proposed to TrueFi, and TrueFi is in the process of approving an audit spend for Trinity. Trinity is a new protocol in the TrueFi ecosystem. Trinity is very largely born out of the insights that we have developed in these presentations, which is that RWA assets need to be usable and composable within broader DeFi. Trinity allows, for now, holders of TF bill, which is TrueFi's T-bill product, to deposit their TF bill as collateral into Trinity, mint a dollar-pegged asset called TRI, and then use that throughout broader DeFi. Some of the initial use cases we expect here are users to loop their TRI into more TF bill to be able to lever up their yield. We expect people to stake their TRI into S-TRI to be able to earn the borrowing fees that come from the protocol. And ideally, this asset will be integrated within the broader DeFi so that it can be used as collateral on other venues as well. We're moving to the audit phases right now with chain security and are planning our initial deployment of Trinity to take place on Base, the L2 network. So do keep an eye out for this as well. This will be going through a staged rollout, likely beginning sometime in May. And so thank you for tuning in to yet another one of these presentations. We ask that you like, subscribe, all that good stuff that content producers are supposed to ask you to do. You can go to our link tree to find all of our links to Twitter, podcast apps, YouTube, Substack, all of those good places. Please do like and subscribe across all channels. Turn on notifications on our YouTube to be informed of when we release content in the future. And once again, thank you for tuning in.